Are you looking to buy a house in San Jose? Well, before you make what could be the biggest financial mistake of your life, you need to watch this video. I've seen buyers lose tens of thousands of dollars on home purchases that look great on the surface, but we're hiding major issues, and I don't want you to make those same costly mistakes. Hi, I'm Theresa, a local real estate agent here in San Jose, and I've seen firsthand how easily buyers can get burned in the market. So today I'm going to give you 7 specific types of homes you may never want to buy here in San Jose. So let's start with one of the most common and costly traps that are seen today, and that is new construction townhomes or condos with HOA issues. So how common are HOA disputes with builders in San Jose? Well, builders in California must provide a 10-year warranty on new construction, and recent state legislation allows HOAs more power to pursue the builders for defects. HOA disputes with builders affect approximately 25% of new development. And what I've seen with these new developments that are 8 to 9 years old or so is an attempt to get what they can out of the builder before that 10-year warranty period is up. Now, you will see this happening now in areas like North San Jose, Berryessa, Milpitas, where there's been a larger development area in the last 10 years or so. So if you're shopping in those areas, be extra keen and pay attention to what I'm going to say. Let me tell you about a recent client who was buying in Milpitas in an 8-year-old development. He was already underwritten by a lender, so he didn't have to worry about the loan and just focus on the property. But this lender on this particular property that he wanted was not able to lend on the community due to pending litigation. So we did our research on what this item was, and the HOA was in dispute about some common area items and potential balcony issues. But as we researched into this newer construction, these were relatively minor items that were going to be resolved. And we found a lender, therefore, who could provide a loan for him and go in with our eyes wide open on what was going on with the HOA. So it's really important to do your due diligence and understand what's going on. What are some typical warranty issues that do arise? Well, again, common areas are really a big item. It could be something with a community playground or leveling of hardscape, or even this recent balcony issue from SB 326 that I had talked about that all condos and townhomes have to address. Now, this is an issue for all construction, the SB 326, no matter the age, but it is also coming up in the newer construction items as well because it's a newer, more recent legislation within the last several years, not within that last 10 years of when that property of newer construction was built. Now, construction defect litigation can take quite a ways to resolve, maybe 3 to 5 years. How do these problems affect property values? Well, it really depends on the age of the property. For example, newer homes and HOAs typically resolve these issues with the builder without an impact to HOA dues or any sort of assessments. But older HOAs may have lower reserves due to the aging structure and increased costs from the initial estimate, and therefore HOA funds that are really low. And in that case, you can expect potentially a special assessment ranging from maybe $4,000 up to some I've seen over $20,000. Now, in this seller's market environment, like we typically have here in San Jose, it's likely that it doesn't affect the overall property value, but it does have an effect on whether lenders can put a loan on the property, especially if it's during litigation. And it can also affect buyer negotiation and credit if there's a special assessment. You want to go in eyes wide open, understanding what that is so that you have the most negotiation power to ask for some of that credit or all of that credit to be paid by the seller at closing. So what should buyers look for in HOA documentation to be more aware? First of all, allow yourself plenty of time to review the HOA documents. Now, these are like 200 plus pages. So it's really extensive. I recommend you have an HOA contingency to allow you extra time to review this. But it's also really important to look right away if there's any litigation. Typically, that is a specific page or item in the HOA package that you can look at. Also, you're going to want to look at the HOA's reserve assessment. You're going to see in there somewhere about a % funded that the HOA is. This is done by an independent HOA review, so it's an insight into potential due increases or assessment. So how can buyers protect themselves? Well, first of all, like I said, I recommend a very thorough review of the HOA documents. But most people aren't aware of what to look for or how to go through all of those pages. So I recommend you have that done by an expert. It's essentially like an inspection of the HOA documents. There is a company that essentially does detailed review or inspection of HOA docs on your behalf, And then we'll explain to you the highlights and things that you should be aware of and give you some fuel if you need to go back and negotiate if you want to continue pursuing this property. So speaking of potential disasters, there's another type of property that seems attractive at first, but can cause major concern down the line. And our number 2 item is to be aware of homes near school district boundaries. Now, I find that a lot of home buyers are buying property due to the public school district. And you will see from one side of a district to another, the different schools add different value and desirability for that particular neighborhood. So if you're near the line and that line shifts, that can drastically change the outcome or view of your property. So how often do school boundaries actually change in San Jose? Well, they are reviewed about every 3 to 5 years. And that really depends on district enrollment or balancing, right? So they don't change that often every 3 to 5 years, but they do analyze it. I did recently in the last 5 years see some school closures in Blossom Valley that did cause some rezoning of schools. So it does happen. Properties within a few blocks of the district line are most vulnerable to the changes since the lines will likely just shift slightly and not be completely redrawn. So what impact do rezoning changes have on property values? Well, it really depends on the change. You may have purchased a home in a top-rated school right on the border and then get rezoned to a less desirable school. In this case, home values could drop 5 to 15% after the unexpected school reassignment. For example, in Cambrian and 95118, there are 2 neighboring schools in San Jose Unified School District that have drastically different school ratings. Now, if that line were to change there, that could be a huge impact to the home prices. So how can buyers research potential boundary changes? I would always recommend you call the school district and talk to them about school enrollment, whether the school is impacted or not, or very low enrollment, to give you a better idea of what the school is seeing and how they are adjusting if there's an issue. Now, what areas are most at risk for rezoning? That's really hard to know without understanding enrollment trends, which is why you need to call the district. And what should buyers know about these school district policies? Well, there's definitely no grandfathering provisions for existing residences in most cases. School capacity issues are driving more frequent boundary changes as some neighborhoods have more owners aging in place and others are really growing with more and more young students. So while school boundaries can change unexpectedly, it's not super common, but you should be aware of it. So our next category of properties to avoid comes with red flags that are much more visible if you know what to look for. And that number 3 item is homes with unpermitted additions. How common are unpermitted additions in San Jose? Over 30% of San Jose homes have some form of unpermitted work. In my experience, homeowners choose not to get permits for 2 reasons. Number 1, the city takes way too long for the permitting process, like months, 6 months or more sometimes. And 2, the fees are extremely high. I personally just paid $6,700 in permit fees in San Jose for a kitchen and dining room remodel. And my contractor initially thought the permit fees would be just $3,700. So that was an additional $3,000 surprise cost that we didn't anticipate. And just something to be aware is if you're considering not pursuing permits, that retroactive permits can actually cost 2 to 3 times more than regular permits. So seriously think about whether permitting the work you're doing is important or not. Now, what are the risks of buying a home with unpermitted work? First off, banks may refuse to finance the home with significant unpermitted space, or at least not count the unpermitted space in the value. Now, the city can require removal of unpermitted additions as well, especially if you're coming in to do new permitted work. And insurance may not cover damage in unpermitted areas. So these are things to be aware of. So how can buyers identify unpermitted additions? Well, first, compare the MLS listings or marketing materials with the tax records and search the public permits records on a property. Also, educate yourself on what requires a permit and what does not. For example, in most cities, cosmetic replacement does not require permitting, such as new flooring, new countertops, simple pick and replace type items don't require it. But if you're doing plumbing work or electrical work, technically, yes, that requires a permit. So late last year, I had clients fall in love with a charming 1960s ranch home in Willow Glen that was claimed to be 2,100 square feet. But when they checked the county records, it was only actually 1,800 square feet, 300 square foot difference. and the previous owner had added on a family room in the back of the home without permits. Not only was the workmanship a little bit questionable, but the electrical wasn't up to code and the foundation of the addition didn't meet current standards. So the cost to bring everything up to code would have been over $75,000 if it was even possible. My clients would have had to inherit a massive liability and potential safety hazard, or completely demo that room and lose that bonus space. So speaking of hidden problems that drain your bank account, wait until you hear about the next category of homes that buyers mistakenly think are a great deal. And that is flipped homes with, maybe questionable renovations. So what percentage of San Jose homes are flips? Well, house flips represent about 15% of home sales in San Jose in 2024. And that's because we have aging home inventory, people that live here for a really long time, which are prime for a developer or a flipper to come in and improve a property. How can buyers spot a bad flip? First off, you need to look closely for odd-looking things, such as outlets at unusual height, doors that are preventing use of a certain space. Also, review inspection for hidden shortcuts like electrical, plumbing, or structural items that were just not addressed. And what are some common shortcuts that flippers take? Well, the average flip takes about 4 to 4.5 months from purchase to resale. And 40% of flipped homes have at least one major defect. Using cosmetic upgrades to mask these defects is a serious underlying problem that can be seen around here. So what hidden problems often lurk behind that fresh paint? Professional inspections find issues in about 85% of flipped homes. And the average repair costs for bad flips can be $25,000 to $100,000. So really be aware of whether that flip was permitted and done properly or not. I recently inspected a flip in Cambrian where everyone loved the way it looked. It was perfect on the surface. New quartz countertops, luxury vinyl plank flooring, trendy light fixtures. But when our inspector looked deeper, we found that they had just covered up really old electrical wiring. The new kitchen was installed over a rotting subfloor, and the beautiful bathroom was hiding major plumbing issues. So the flipper had spent all their money on cosmetic upgrades and completely ignored the crucial systems that make a house function. So these types of flips are in San Jose right now, and you need to be aware that they could be a ticking time bomb for unsuspecting buyers. Make sure you're with an agent who helps you do very thorough and diligent research on a property, because not all flips are like this. So proceed with caution and make sure the inspections are good and that the workers used were licensed workers. But if you think problematic flips are concerning, wait until you hear about our next category. This is creeping up as a bigger issue recently, and it's homes that might not even be insurable in the coming years. Yes. So number 5 is homes in high fire zones. Did you know that over 25% of San Jose homes are in high or very high fire zones? Some of these homes have recently lost insurance because their insurers are withdrawing from these high-risk fire zones. How are home insurance rates affected by fire zones? Well, insurance premiums can be 3 to 5 times higher in fire-prone areas. You might be budgeting, say, $200 a month for your home hazard insurance, but in a fire area, you can expect 2, 3, 4 times that amount, which obviously can greatly affect your budget. But all areas of California are seeing premium increases across the board. It used to be about $100 a month to insure your property for hazards, but today we're seeing more $200 a month across the board. And there are California Fair Plan coverage that will help properties in high fire zones, but those policies will cost $5,000 to $15,000. I've even heard $20,000 annually, and they may not even be full coverage replacement that you would have seen from a traditional hazard insurance policy. So be sure to read thoroughly and make sure, if you're pursuing insurance from different providers, that you understand the details of the coverage. Now, how do fire zones impact property values? Well, if you're in a fire zone, then you will now have to factor in the risk and maintenance costs when selling your property, which is typically means that there's going to be less buyers able to afford the property, and home values therefore will likely decrease, at least a little bit. So it really depends on the additional maintenance and insurance costs and how that impacts the affordability for the buyer. So what additional maintenance costs might be faced in these areas? Well, the first is brush clearance and defensible space maintenance. That can cost $2,000 to $5,000 annually, depending on where you are and how much debris is around the property. This also is on top of those increased insurance premiums that we talked about. Now, these properties also have special fire hardening requirements to follow, such as special tempered glass for windows, landscaping to be a minimum space away from the house, special roof materials to be used, and these special requirements aren't always added into properties and therefore can add significant amount of money, say $20,000 or more, to the home upgrade costs in order to get the home insurance policy. I have seen many home insurance policies say you must do this before we close escrow and insure the property. So be aware. Now, last summer, I had a client interested in a gorgeous home in the East San Jose foothills. The views were spectacular. The price seemed reasonable compared to similar homes in other areas, but the reason was that insurance quote was astronomical. The first 5 companies that we reached out to flat refused to cover it at all. And the 6th wanted $12,000 a year for very basic coverage that didn't actually cover very much or have a high value. The current owners were being forced to sell because they lost their insurance and they had been using the same insurance company for over 20 years and poof, they were gone. So the only option was the California Fair Plan, which was triple their previous rate and above their budget. So between the insurance costs, the required fire safety improvements, my buyer clients would have been paying an extra $20,000 annually just to maintain the property. So while fire zones prevent obvious risks, our next category of property comes with hidden financial dangers that can devastate your bank account without warning. So item number 6 is homes with extensive termite damage. So how prevalent is termite damage in San Jose? Well, 85% of homes show evidence of termite activity. Some of it's minor, some of it's extensive. So how do you know? How prevalent is termite damage in San Jose? Well, 85% of homes show some evidence of termite activity. There's a price range, and we'll get into that. Average termite treatment costs have risen, of course, since 2020, like many other things, but they're up 60% for termite treatment costs. So what areas are most affected by termites? Well, any part of the house that is wood is what termites want to eat. So if you have a home with wood siding, it's extra vulnerable because it's easier access for termites to get into the property. Also, any wood contact to soil is a vulnerability as well because there are 2 different varieties of termites, ones that fly and ones that live in the soil. So how can buyers identify potential termite issues? Well, first, you've got to really study that termite report and make sure it's a legit company here in the area. Be observant about the report. If the report is only going to state what they can see, and if there's a good amount of visible evidence and damage, there's likely hidden damage behind the walls too. And many inspectors will call out potential hidden damage, further inspection required. So hidden damage often can cost 2 to 3 times that initial visual estimate. What are the true costs of termite remediation? So a 2,000 square foot home will cost about $3,000 to fumigate. But fumigation eradicates the live drywood termites that fly, and it does not fix the damage that was there or deal with the soil termite called subterranean. So 30% of termite damage is not even visible in that inspection. So you might be aware to have to pay even more and budget higher than what's called out. Now, typical repair costs are $5,000 to $7,500 total in a home, but in severe cases, which do exist, full structural repairs can exceed $100,000. So it can be a complete surprise and blindside. So a perfect example of this happened last year in 2024. My buyers were excited about a mid-century home in Willow Glen, which was priced $200,000 below market value. The termite inspection report showed some minor damage of about $12,000 in recommended repairs, but once the work began, they discovered termites had hollowed out major support beams in the walls. Final repair bill came to $85,000, and they had to move out for 2 months during those structural repairs. So what seemed like a great deal turned into a massive financial burden and renovation nightmare. But if you think termites are scary, wait till you hear about our final category, a problem that can literally bring your whole house down. Point number 7 is homes with foundation problems. Now, I've talked about this before, and I want you to be very aware of this. How common are they in San Jose? Well, they're becoming more and more common because our homes are aging. San Jose homes were mostly built in the 1950s to 1970s, and with areas like Willow Glen, Japantown, and Rose Garden being much older in the 1920s and 30s. 40% of the pre-1960s homes have significant foundation issues that need to be addressed or have been addressed, hopefully properly. So be aware of those particular properties and what the risks are. So what causes foundation problems locally? Well, a couple different reasons. Number one, excessive moisture to the foundation can cause horizontal cracks. Also, vertical cracks that grow or make the home unlevel can happen with the expansive soil that we have here. And clay soil is very common in this area and could be even more susceptible to movement. For example, areas of Willow Glen have very high water table and expansive soil, with stress the foundation after decades. What are some of the signs of foundation trouble that you should be aware of? Unlevel floors can be one big sign that there is something going on underneath the house. Also, cracks in walls, especially cracks that are all in the same direction throughout one room, is a strong sign that there could be potential issues. So how much do foundation repairs typically cost? Well, if you're lucky, foundation repairs are going to be about $15,000 for a minor case. But repair costs for some of these larger unleveling or big, long horizontal crack cases can be anywhere from $30,000 to $150,000 plus. Last fall, I saved my clients from buying a beautiful 1940s home in the Rose Garden that had all the vintage charm they wanted. But during our visits, we noticed slight sloping in the floors in one corner of the house and some cracks in the walls in that room as well. So we ordered a detailed inspection. And our foundation specialist discovered the entire foundation was failing due to years of soil movement. The repair estimate started at $175,000, and it could potentially have gone higher once they started the work. Plus, the home was going to have to be lifted and temporarily supported during the repairs, a process that could take 3 to 4 months to fully complete. So what looked like minor cosmetic issues were actually symptoms of a catastrophic foundation problem. So if you're house hunting in San Jose, don't let these potential pitfalls catch you off guard. I've helped hundreds of buyers avoid these expensive mistakes and find safe, solid investments instead. My contact information is in the description below. Let's talk about finding you a home that won't become a money pit. Now that you know what type of homes to avoid, make sure you check out my next video where I reveal the 5 best neighborhoods in San Jose for first-time home buyers. Click the video on your screen now to learn where you can find the best value and the strongest appreciation potential in today's market.